Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we're talking about the real estate update. And real estate is very important because we talked before about the consumer balance sheet in the U.S. and how it's $101 trillion. Well, real estate makes up 25% of that, so it's a very important part of our economy. And currently, housing price index came out today, up 0.7% in March, and year over year, housing prices up 6.1%. And on top of that, the purchase mortgage applications, they rose 17% year over year. So we're seeing real estate getting some good footing here, a strong foundation, really building on some good things here.
Yeah, new home sales came out yesterday, and if you're sitting down, get ready to pop up because these numbers are just mind-boggling, I guess I'll say. New home sales for this month were 619,000. Now that's on an annualized rate. As you can see for the prior month, 523,000. And even the consensus estimate was 531,000 for this month. And you see 619,000, well above 531,000. This is actually the highest number in the current economic cycle, and it's up 24% year over year. So as you can see, these new home sales really, shattered what the expectations were. And also talking about supply, it is now currently 4.7 months of the supply for new homes. It was 5.5 months last month, so we should see some new homes coming online to kind of keep up with demand.
Yeah, I mean, real estate, again, as I said, you're good footing here, so really looking at it, and again, some good things going forward. And that's what we talked about, having a builder in your portfolio. Make sure it's a good builder or something that relates to that. So with that, we thought we'd look at a company that's related to housing and building, and that's Caterpillar, symbol CAT. We do see the current price around $72 a share. The high $88.82, the low $56.36, and you can see if you go back a few years, you see the high was as high as about a 110, 112 here. So a lot of things, but is it a good buy now? Let's take a look at some numbers here. We see, unfortunately, sales down 19.9%. Earnings per share down 67.6, so sales and earnings have some problems there. The balance sheet, well, current ratio 1.29, debt to equity not looking good on the surface at 244.7, but there's more to it than that, isn't there?
Yeah, it's because they have different segments in their business, and they have a financial product segment, which really affects the total debt to equity. As we've talked about in the past about financials having different balance sheets. As you can see here, this is for machinery, energy, and transportation. Their debt to total equity is 60.3%, well below that scary number of about 245%. A little disappointed by this number, however. Going forward to December 2017, estimated earnings per share of $3.33 gives a target sell price of $54.95, below that current price. So even though that price has come down, I would still stay away from Caterpillar.
Yeah, I agree with that. Again, these numbers don't look good. And again, very important to understand these numbers. You got those from the 10K, 10Q. Understand the numbers in your business. That's what we do here. All right, speaking of that, maybe you're not happy with the current return on your money, on your investments. Maybe you're not happy with the current advisor because he doesn't look at this stuff in detail, he's more of a salesperson than actually an investment person. Well, maybe that means it's time for you to give us a call here at Wilsey Asset Management. We've been managing money successfully for over 30 years.
Hey, you want to call and have a conversation with us? Phone number here, 858-546-4306, or you can contact us at our website, smartinvesting2000.com.